Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because even with all the fear and uncertainty surrounding Bitcoin right now, the global liquidity index is still in an uptrend. Bitcoin is still consolidating above resistance and market sentiment is still going through a healthy reset. And now this is officially the longest global liquidity index uptrend we have seen this entire cycle so far. And if it plays out anything like the previous three, Bitcoin should still have quite a bit of room to run here until about August of this year, based on that lagged correlation we've been monitoring this entire cycle. And we know the global liquidity index uptrend has been driven quite a bit by the downtrend we've seen in the US dollar, but it seems to be overdue for a strong bounce here. The price action looks very similar to what it looked like before the previous two strong bounces. We saw the US dollar index sell off, bounce, go into a lower low, and then put in a big rally. Same thing here, sell off, bounce, lower low, big rally. And recently we saw a low bounce. We just put in a lower low and it seems ready to put in a larger rally. And a lot of this is driven by the fact that we're only going to be seeing 2 rate cuts in 2025 as of right now, and the Fed will not be cutting rates in today's meeting, and the market is not even expecting any rate cuts for next month's meeting. Higher rates for longer does mean the US dollar index is probably going to rally over the next few weeks, which should put downward pressure on the global liquidity index. But because of the 75-day lag, Bitcoin can still rally for the next few months until about August before being impacted by those lagged effects of falling global liquidity. And this is why the early cycle scenario is still my base case. After a bit more consolidation, I expect Bitcoin to rally into Q3 because of what we've seen from global liquidity and that correlation we have seen this entire cycle. I would love nothing more than to see global liquidity keep going higher into Q4 or into the end of the year, and that would point more towards the normal cycle scenario, but I don't see that happening as of right now as my base case because global liquidity has been going straight up for a while now, and it does seem like the US dollar index is overdue for a bounce, and that will put downward pressure on global liquidity, and it points quite a bit more to the early cycle scenario, but I don't believe the cycle top is in yet. I don't think the pain cycle scenario is likely. I still think we see new highs in Q3, and if we're lucky, we might even rally into Q4 if global liquidity can maintain this uptrend. And because everything is still on track, no changes were made to my portfolio this week. I'm still quite happy with my holdings, and I still think I am quite prepared for all possible outcomes. But of course, my portfolio is more positioned for the outcomes that I believe are more likely. And if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market, you can check out the Crypto Enjoyers program in the video description below. But as of right now, Bitcoin is still consolidating nicely below all-time highs. Maybe we get some headline risk or geopolitical tensions that take us back down to the possible region, but I don't believe Bitcoin is going back below 80K before this cycle ends. And my worst case scenario that I could see right now is the low 90,000s before we re-enter price discovery. We've also been seeing a nice reset in market sentiment. We went straight from extreme fear in April directly to greed recently here a few weeks ago, so it makes sense that we cool off a little bit back into the neutral region before our next move higher, especially with all of the leverage we saw piling into the market. This is exactly why I called Monday's free weekly report healthy reset, because for now, it just looks like Bitcoin is having some healthy consolidation between our 109K range high and our 100K range mid. And all of our main narratives are still fully intact. Last week's strategy announced another $1 billion Bitcoin buy. We had a NASDAQ listed fintech company announce they're going to be raising just under $1 billion for a Bitcoin treasury. Pompliano is leading ProCap BTC and raising another $750 million to buy Bitcoin as part of a Bitcoin treasury program. And Trump Media is doing the same thing as well. So there's a lot of popularity right now raising these Bitcoin treasuries and using capital markets to buy Bitcoin. We're also still seeing strong ETF inflows, but it's important to remember that Bitcoin is now over a $2 trillion market cap. So it takes a lot of money to move these assets higher. And as of right now, I'm not seeing the required inflows or demand to hit these crazy price targets that a lot of people are calling for, like 200K per Bitcoin or 300K per Bitcoin, because as price goes higher, long-term holders sit on more and more profits that they can take on their holdings. And these corporate treasuries, as of right now, are not enough, in my opinion, to send Bitcoin to these crazy price targets. We also have to remember that anybody buying Bitcoin now is buying at over 100K, and anybody who's held since the bear market is still up about 600% on their holdings. So as price goes higher and higher, investors will continue to take profits, and a couple $1 billion here and there will not be able to keep up with that sell pressure. So I'm keeping my eye on price targets like 130,000, 140,000, maybe even 150,000. But I'm seeing a lot of people relying on the fact that we have to hit 200K this cycle. But as of right now, I don't see how that would be possible with the current inflows and corporate treasuries that we're seeing. So we'll see what happens. For now, we just saw another false breakout for Bitcoin, and it does seem like more chop and consolidation before the next move higher is likely. Of course, a lot of that is going to depend on global liquidity, what we see from the US dollar index over the next few weeks, and what Powell says at today's FOMC meeting. Does he still give off the hawkish rhetoric that no rate cuts are coming anytime soon, and they're still concerned about inflation? Or does he talk a little bit more dovishly and say that rate cuts could be coming soon and they're open to easing policy a little bit sooner than the market currently expects? The main comments I'm going to be looking out for are what they say in terms of quantitative tightening and quantitative easing. Their balance sheet has almost completely flatlined here, but they haven't announced that quantitative tightening is going to stop quite yet. So that could be a huge announcement if that ends up being said, but I don't believe there's going to be any surprise rate cut or anything like that, because the Fed has not been surprising the market with these decisions and they've been announcing it way in advance. So I would expect them to also announce the end of QT instead of just doing it without saying anything. We know the labor market continues to weaken. We know inflation is headed in the right direction, but still has not reached the Fed's target. And we know that growth is still positive. As of right now, the Atlanta Fed is forecasting real GDP at just under 3.5% for Q2. So I don't see a lot of reason for them to have an excuse to cut rates here. And maybe they'll just stop quantitative tightening instead. For now, risk assets are still doing quite well, and that gives the Fed quite a bit of room to keep rates higher for longer. So really all I think we can hope for here is for them to stop quantitative tightening and put less pressure on the bond market. And now, speaking of altcoins, I know there's a lot of people out there thinking these ETFs are going to trigger alt season, but we are not really even expecting these ETFs to be approved before the final deadline. And for most of these, you're looking at October or November. And I wouldn't be so convinced that these ETFs are going to be enough. We saw Ethereum really struggle and sell off when its ETF went live, because wrapping something that nobody wants to buy in an ETF doesn't make them want to buy it all of a sudden. We do need to find other reasons for these altcoins to get demand. And we also have this narrative of these altcoin strategic reserves copying what happened with the Bitcoin treasury companies. We have SharpLink buying Ethereum, but that hasn't done much for price. We have DeFi Development refiling to buy Solana and add it to their balance sheet. That hasn't done much for price. We've even seen attempts at XRP treasuries, even a Fetch AI treasury, but as of right now, that hasn't really done much. And I don't think this is going to pick up the way many people are expecting. Right now, we're just seeing some dying, desperate companies trying to use altcoins to pump their stock price, but it doesn't seem to be working as of right now. I think what altcoins actually need to do well is not corporate treasuries or ETF wrappers. I think what they need is actual innovation and actual demand from real users for things like stablecoins. We got an announcement this week that JP Morgan is launching their JP Morgan dollar on an Ethereum layer 2 and is going to try and compete with stablecoins. We also see that Coinbase is trying to seek SEC approval for tokenized equities. And we know tokenization is the other huge narrative and trend we're watching alongside stablecoins. And I think that's what's going to be required to send things like Ethereum a lot higher. It's going to take adoption. It's going to take excitement from investors to actually want to invest in these things and not just ETFs going live or some company that's dying putting an altcoin on its balance sheet. As of right now, Ethereum is still really struggling to get close to 2,800. You can see that with all these huge wicks to the upside. I don't know if I've ever seen a chart look like this where every single attempt to get close to resistance immediately gets sold into. But the good news is that Ethereum whales are buying the most Ethereum since 2018. You can see that huge net position change we've seen recently as Ethereum is being accumulated here. We're also seeing it reflected in the Ethereum Bitcoin pair. We had that strong bounce, and right now it's consolidating sideways and looks to be prepping for its next move higher, perhaps because of the JP Morgan launching a token on Base News and Coinbase trying to tokenize equities on chain. So I am optimistic for Ethereum. Solana looks like it's struggling as well, continuing to consolidate and sell off here. As of right now, this looks like a big rally followed by a pullback, and you would hope the next move would be a rally higher, but we're going to have to see how that plays out because it'll depend very heavily on what Bitcoin decides to do. And speaking of Bitcoin, Solana does not look much better on its Bitcoin pair. It's trying to hold that previous low, but it continues to grind lower here. Both Solana and Ethereum have really struggled over the past year compared to the performance we have seen from Bitcoin. So we'll see if that improves in the near future. A lot of it is going to depend on whether Bitcoin is going to bottom in this consolidation range before breaking out higher, or if it's going to head back to the range low and then break out higher. That deeper drop to the range low would really punish altcoins once again, but we'll see how that plays out going forward. And speaking of going forward, as we look forward, the federal government is still running huge deficits. We're now at $1.3 trillion for this fiscal year. The trend of larger fiscal deficits continues to worsen, and exponential debt growth usually results in exponential money supply growth, which is bullish for risk assets that we denominate in the devaluing fiat currency, like the S&P 500, and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.